Headed into this week, the markets were focused on the Fed meeting Tuesday and Wednesday. Now, it's no surprise that the Fed opted not to hike their short-term benchmark rate that had been forecasted months ago. It was the release of the dot plot at 2 o'clock that the markets are paying most attention to. This dot plot is a graph that breaks down individual Fed members' projections for the federal funds rate over the next several years. Now, you might say, if the Fed doesn't set mortgage rates, why do the markets really care about the Fed's projections? And this really serves as a gauge, as a good indicator of how the Fed is expecting economic conditions to be years down the road. Now, when compared to the one released back in June, the previous dot plot, Fed members expected the federal funds rate to be a 0.5% higher through 2024 and 25, much higher than what the markets had been expecting. This is why we saw rates unfortunately shoot up to close out Wednesday and certainly through Thursday, taking rates to their highest level going back, I think, 23 years. Now, we did see a bit of retraction on Friday, which is certainly welcome, not enough to erase the losses from the two previous days, but hey, we'll certainly take it. But what does this mean for rates moving forward? Jerome Powell made it very clear during his 2:30 press conference that future decisions would still be based on incoming economic data confirming the economy is slowing. This is not what we have seen over the last several weeks. Retail sales coming up, business and manufacturing, jobs and wage growth, even inflation ticking up. We want to see the economy slow. We want to see inflation trend lower, closer to the Fed's 2% target before we start seeing a more meaningful shift in rates. So what does this mean for our buyers? Should we advise them to wait? I mean, certainly not. Low inventory is continuing to push up home prices, home appreciation. You want to get in that property now, enjoy all those benefits of a home ownership, and then refi down the road once you're able. Paying more for an asset, even with a lower interest rate, does not translate to a lower monthly payment. You have any questions about these headlines, about these current rate trends, or if you want to talk about your own pre-approval options, definitely give me a call. I'd love to talk to you, all right? Have a great week.